for that nice introduction. And if you don't mind, I'm going to take myself off camera so I'm not distracted by myself, so I can show you the presentation that I have today, and then I will leave some time at the end for some questions. So let's get right to it. What we're going to talk today about is how to protect yourself from investment scams. The first thing that I am going to need to do is just give you a brief disclaimer at the beginning that we have to do at the beginning of all of our presentations, which effectively says everything that I say here today is not an official statement of the Securities and Exchange Commission. I can't give you legal or business advice, but hopefully I'm going to provide you with some information that's helpful to teaching yourself how to protect yourself from investment scams, and also telling you about the resources that we have at the SEC. And we do have a virtual booth here today, staffed by my colleague Joanne Morris. Good morning, good afternoon, Joanne, with lots of really helpful information. So I hope if you haven't gone to the virtual booth already, you will go after the talk and take advantage of some of the free resources that we have for the American people. What we're going to talk about today generally is I'm going to give you a brief overview of the Securities and Exchange Commission. If you're not familiar with the agency, hopefully that will give you a sense of what the agency does. Then we'll talk about some of the red flags of fraud that you should be aware of. Knowing those red flags will help you protect yourself. I'll identify some of the common scams that we see, some of them kind of repeat players, all the time popular common scams, and some of them a little more recent. So knowing those scams will hopefully alert you to what you should be aware of. And then finally, some affirmative steps that you can take to do research to protect yourself when you're presented with an investment opportunity. So as I say, everything that I say here today is not an official statement of policy, and I cannot give legal or business advice here today. As mentioned in the intro, I'm an attorney. I've been in the Los Angeles office of the SEC for we're getting pretty close to 20 years, not quite there yet, 18 years, roughly 10 of which I spent in the Division of Enforcement, investigating and prosecuting some of the very kinds of scams that we're going to talk about today. In the last few years, I've spent supervising the group that conducts investor outreach, like we're doing here today, and that liaisons with other agencies and community groups. So what is the SEC? As you probably know, the SEC is the exclusive federal regulator of the securities market. And we have this three-part mission to protect investors, to maintain basically the best capital formation markets in the world, and to facilitate the formation of capital, which is what really drives all kinds of businesses, small and large, that provide the economic engine that make this country such a great place for so many of us to live. We oversee a pretty big regulatory space. We're a relatively small to mid-sized agency, but as you can see on the screen, we oversee and regulate really quite a large industry. Thousands of registrants and market participants like investment advisors, public companies, clearing agencies, and self-regulatory organizations that you might be familiar with, like FINRA and the PCAOB, which oversees the accountants that audit public companies. In addition to that, we conduct inspections of the entities that we oversee, and we review the filings of public companies. But we're also, as I mentioned, a law enforcement agency. Lots of times people ask me, you know, if so-and-so has broken the securities laws, why didn't the SEC put them in jail? And the simple answer is that the SEC is a civil agency. We don't have criminal authority, but we do have pretty powerful civil remedies, including disgorgement, barring people from working in the industry, repatriating assets that have been spirited away overseas, and working very frequently with the criminal authorities who may be conducting their own parallel investigation. In fact, I would say of the investigations that I worked on and the civil prosecutions that I brought, probably 2/3 of them involved a parallel criminal component, with criminal charges being sought by the FBI and the U.S. Attorney's Office. As you can see, we are pretty active. And for the year that I have the most recent data for, we collected almost $4 billion from more than 800 enforcement actions. That's fiscal year 2018. Our goal is always to try to get that money back to harmed investors whenever we can. So we're very conscious of the fact that there are real people being harmed by violations of the securities laws, and whenever possible, we do try to get their funds back to them. Now, I am going to say that very often the bad guys in these schemes spend the money on things that is not recoverable, things that are not recoverable, like fancy dinners or fancy vacations, clothes, which depreciate in value almost immediately upon buying them. So it's pretty rare that we can get back dollar for investors, which is one of the many reasons why it's so important to protect yourself from securities fraud, and why the tips that we're going to talk about today are so important. And then I would be remiss if I didn't mention the Office of Investor Education and Advocacy. This is the office that responds to the tips and complaints from the public, that conducts educational programs like we're presenting here today, provides the materials that are available in our virtual booth, and we get thousands and thousands of complaints. In fact, the number that you see here on the screen, 17,000 complaints, that's quite outdated. As you might imagine, the pandemic does not bring out the best in everyone, and we've seen just a huge uptick in complaints since the beginning of the pandemic. Almost everything that I talk about today is going to come from our website, investor.gov. So let me show you what this website looks like. And again, a lot of the resources that are in our virtual booth, you can actually access on this website, investor.gov, plus a whole lot more. And in particular, I want to draw your attention to this section, Protect Your Investments. And that includes many of the resources on fraud, how to avoid fraud, how to protect yourself, how to report securities fraud to the SEC. So certainly check out that section. But really, there's just a wealth of information on this website, and each one of these colored sections of the website in front of you, these blue sections are all drop-down menus, these red sections are all drop-down menus. So quite a bit of information, really just go in and explore. And I am also going to come back to this part of the landing page that you see here, check out your investment professional, because that's one step that you can take and should take whenever you're dealing with somebody who's trying to sell you an investment, to check out the company and the individual who's trying to make that sale to you or provide you advice about investing for a fee. You want to check them out, and that's right there on our landing page. Why are we going to be talking about financial fraud today? Well, the answer is, unfortunately, financial fraud is extremely prevalent in this country. FINRA Foundation surveys found that more than 80% of the respondents to the survey had been solicited to participate in a potentially fraudulent offer, and 60% of those respondents had in fact invested money in a fraudulent offer. And most troubling of all, more than 10% had lost a significant amount of money after engaging with the fraudulent offer. So unfortunately, fraud costs Americans a lot of money every year, more than $50 billion a year. I wish I could say it's not as common as it is, but unfortunately it is. And particularly for people with retirement savings, you are unfortunately a target of fraudsters, because they know that retirees may have funds in 401k or other kind of investment account that people who were at the beginning of their professional careers just may not have accumulated yet. Well, unfortunately, that makes people of retiree age a very popular target for fraudsters. So knowing that, what are some of the red flags of fraud that we're aware and that you should be on the lookout for? Many scams sound too good to be true, so trust your instincts. If the offer promises high returns with little to no risk, it's probably a scam. That's not actually the way returns and rewards are correlated in investing. If something has a potentially high return, that means if it's a potentially risky investment with a higher risk of loss, that's why they're offering those high returns, to compensate for the risk of the investment. So there isn't a legitimate investment where you've got little to no risk and a really high return. And just as a sense of a kind of a marker, the average returns at the large cap market, the large companies traded on exchanges in the United States through the life of the modern stock market, so the last 100 years or so, is around 7 to 8%. So once you get north of 7 to 8%, you're talking about more risky investments. And that should be clear from the investment material. Those high returns correlate to more risk. Don't be pressured to buy right away. No legitimate investment is going to require a quick decision. Wait until you have time to do your own due diligence, and if somebody's pressuring you to act quickly, there's probably a reason why they don't want you to take the time to do that due diligence. If there's no prospectus or offering memorandum or statements with public filings, that's a big red flag. And then, as I talked about, you're going to want to check and make sure that the salesperson is licensed and registered. Another red flag of fraud is an unsolicited offer to invest. Offers that come out of the blue, you should tread very, very carefully. Do your homework if you're tempted by the offer, but better yet, walk away. The best scenario is when you do your own research and choose where to invest. Fraudsters use persuasion tactics that feed on your emotions. And the slide in front of you has a list of some of the more common tactics that fraudsters use. They may promise these great unrealistic returns. They may claim to have fancy titles or specialized expertise. They may claim that sophisticated folks or people that you trust have already invested with them. They may use scarcity tactics or time pressure to make you think you don't have time to research the investment, and if you don't act quickly, you'll miss out. And a very popular tactic is to give you some kind of free dinner or free lunch, what we call a free dinner seminar, or some other enticement to get you to invest. I'll waive my fee for you this time. I'll give you an incentive interest rate if you act quickly. These are designed to make you feel obligated to make an investment for them. You feel like you're getting this favor, and so general human nature is to want to do a favor in return. But keep in mind what you're probably being given is a pretty small favor, a lunch, a small reduction in a fee, and what you're being asked to do in response is a really big favor. Hand over your retirement dollars to them. So be very careful when these kinds of situations are set up. All of these tactics are red flags of fraud. Fraudsters and scam artists will work very hard to separate you from your hard-earned money, and there are a number of ways in which they do that, so we're going to talk about those. Keep in mind that investor.gov has a lot more information on these and many other types of scams, so please, I encourage you again to go and check out that website when we're done with the presentation. One very common kind of investment scheme is called a pump and dump. This is a type of fraud that usually involves the cheapest kind of stocks, what we call penny stocks or microcap stocks, that are typically trading under $1 per share. And very often these companies don't have any earnings, they don't have any assets, they don't have any business operations. So that should tell you right there that's a pretty risky investment. Sometimes it involves a very new legitimate company just starting out that is risky enough for some reason it wasn't able to raise capital through other channels. But lots of times it also involves companies that have been taken over by fraudsters, because it's pretty easy for fraudsters to get control of these small companies, and then they will hype or pump up the stock to attract investors, and as investors buy the stock price goes up, and that's when the promoters sell or dump their shares. And when they dump their shares, the stock price plummets, and most investors are left with worthless stock, and the fraudsters have made away with the profits from dumping their shares. So be very careful about investing in this space. Microcap companies or penny stocks, this is a fairly risky area of the market. Ponzi schemes are an ever popular tactic of fraudsters. Very often in the beginning, these look like legitimate investments, but many of these scams involve unrealistically high or unrealistically consistent returns. So the same return over a long period of time, even as there are all kinds of changes in the larger market and society. The scammer may be using the money from new investors to pay returns to earlier investors, and may not be investing in anything that's actually generating revenue. So the pre-existing investors have the illusion that they're invested in something real because they're getting money, and so they're thinking, oh, I'm getting an actual return, but actually the money is just coming from other investors. Again, this is an area where you really want to look and find out, are the sellers registered? Are the investments, the investment product that you're actually investing in, are those registered? Because almost always Ponzi schemes involve unregistered sellers and unregistered investments, and some description of the investment that's really too complex to understand. And it's too complex to understand, not because they want you maybe to think, oh, I just don't quite get it. It's too complex to understand because it's not real. The complexity exists to be confusing, so that you don't ask too many questions. A pyramid scheme is a very similar kind of scam. It may be marked as a legitimate multi-level marketing company, which is where people have to recruit other salespeople to join, and everybody gets a portion supposedly of the money in the downline, as it's called. People below are paying up to the people that recruited them. Be very skeptical if you are going to receive more money for recruiting people than for selling a product. Or if a company promises easy money for no work or high returns in a short period of time. And if you don't understand the multi-level marketing compensation structure, you should be very concerned. Ask to see the financial statements audited by a CPA showing that the company generates revenue from actual products or services to people outside the program. As a general rule, legitimate multi-level marketing companies derive revenue primarily from selling products, not from recruiting members. Sometimes people receive investment newsletters, either because they've asked to receive the newsletters, or they might receive them unsolicited via email or regular mail or through social media. Some companies will pay newsletters to tout or recommend their stocks. And this is technically not illegal as long as the newsletters disclose who paid them, how much they're getting paid, and the form of the payment. But lots of newsletters will claim to offer unbiased recommendations when in fact they are getting paid some way. Even if these newsletters are offered on or advertised on legitimate websites, that doesn't mean they're not fraudulent. So do your own research and checking about any investment that you're going to make. Don't rely on the recommendations of a newsletter. Then we see not infrequently something called an advance fee fraud. And this is where somebody asks you to make a payment in advance. So for example, have you ever been told that you won a contest or a lottery, but you just have to pay the taxes beforehand? This is an example of an advance fee fraud. There are never any winnings in these situations. Once you make that payment of the tax or commission or the incidental expense at the beginning, that's probably the last you're ever going to hear of that person. Don't fall for any kind of official looking website or email. Remember that there's no such thing as a free lunch, and no legitimate lottery is going to ask for a payment up front. Fraudsters sometimes pose as SEC officials or other government agency employees, calling people on the phone, sometimes asking for detailed financial information or a PIN number. The SEC does not make these kinds of unsolicited communications. If you receive a call from someone claiming to be from the SEC, get the person's information, hang up the phone, and then call the SEC's toll-free investor assistance hotline, which is, and I will give this number at the end of the presentation as well, 1-800-732-0330, and then ask, do you have a person by this name employed there? They called me. And if not, then you can report them to the people at the investor assistance hotline. And keep in mind that these impersonators may be going so far as to imitate the official SEC seal or try to change their email address so it looks like it came from the SEC. Unfortunately, these kinds of scams are really common, not just in securities investing, but in all kinds of areas. So anytime somebody from the government claims to be calling you, hang up, find the official government phone number, and then call that government office and find out if that was a legitimate communication. One type of fraud is particularly vexing because it's when the seller has a connection to the people that it's targeting, or some basis for which it can create a level of trust among its potential victims. We call this an affinity fraud, and it's where a member of your same cultural or ethnic or racial or religious community or business community seeks you out, hoping to use that affinity between you as a way to scam you. And here again, the same rules apply. You need to check the background of any seller before you invest, even if you belong to the same community or you live in the same neighborhood or share some kind of common background. Unfortunately, almost all of the scams that I worked on involved some kind of affinity component where people targeted people that they went to church with, people who had the same military background as them. Basically, anybody and anyone is part of some group and is a potential to be victim to an affinity fraud and an investment scam. On the screen, you can see just a few examples of some of the recent groups that we have seen targeted by scam artists. Include seniors and retirees. really every ethnic community you can think of. As I say, military personnel, professional athletes have been targeted by other professional athletes. Federal employees have been targeted by other federal employees. Religious groups can be targeted by people inside their religious groups. So unfortunately, whomever you're dealing with, you need to check their background. And just remember, even if it's a person that you really think that you can trust, that person may themselves have been scammed and not realize that they have been sold something fraudulent and are now selling it to their friends. They may not even know. So no matter who you're dealing with, you need to check the investment and the background of the people selling you the investment. So how do you go about doing that? I think this is really the most important part of the presentation, to figure out how to check and what to check. So the very first step to protecting your hard-earned money from investment scams is to make sure you're dealing with a licensed, registered investment professional. And as I said on our website, investor.gov, right there on the landing page, which you can access, as you can see on the screen, on your cell phone or your regular computer, you can put the name of the individual and the company that they work for in a search engine. And find out whether or not they're licensed and registered. Now, assuming they are licensed and registered, up will pop, basic background information about them, but you can also click on an icon that says get the detailed report. And that detailed report will tell you, where do they work? Where have they worked in the past? What licenses and registrations do they hold? How long have they held them? Have there been, most importantly, any complaints or enforcement actions against this individual? So if this individual has a history of customer complaints, if this individual has been sued by FINRA or the SEC before, you're going to see that in this detailed report. And it's really pretty, it's not written in any kind of legalese. It's not, it's the goal of the report is to be really accessible to everyone. So I think if you go in and you use this, you'll find it really very helpful. And if you're dealing with a person and a company that's not registered, that's a huge red flag. In addition to that, you want to make sure that the thing that you are investing in, the investment contract, the prospectus, the stock, the bond, is also itself registered. Scams very frequently involve unregistered companies. And here I always like to make sure people are clear. When we're talking about a security, we're not just talking about the stock of Exxon, something traded on the New York Stock Exchange. Anytime people's money is pooled together in a common enterprise, and the people, the investors, are passive, their funds have been mixed together, then they are not expecting to do the work to generate profits, but they are expecting that profits are going to be generated, and those profits are going to be generated through some specific business activity. That very well may be a security. So a security can take the form of something that looks pretty informal, like a 2 or 3 page agreement might involve a security. And if the security is being offered and sold to investors, it probably should be registered, or if not registered, then at least filed with us to claim an exemption, something that we call a Form D. And these registration statements and these Form Ds will be in our EDGAR database. And you can find this by going on our website, sec.gov. And right in the top right-hand corner, you will see a search engine for search the company name. Put in the name of the company that you're investing in, and up should pop either a whole list of documents with a lot of really helpful information, 10Ks and 10Qs with financial information, 8Ks, which are linked to press releases, or a Form D filing that explains why they don't have to be registered. Here's the exemption that they're relying on, and even then, a little bit of information, how much money they're attempting to raise. If you get nothing, that's a huge red flag. EDGAR looks like this. This is the landing page of sec.gov, and right up here on the top right-hand side, you can see this gray area where it says company filings. If you click on that, you will get to the EDGAR search page that you see in front of you on the screen. And then you just put in the name of the company here in the search bar. And if you're saying to yourself, I don't know a lot about what these different forms are, what is a 10K or a 10Q, we have a really helpful guide here, how to research public companies. It gives a lot of information, describes all these forms, and can help walk you through some of the documents that you're seeing. So I really encourage you to check that out. These should be your first 2 steps anytime you're considering an investment. checking the background of the salespeople and entities, and checking the background of the company itself that you're investing in. Other steps you can take to protect yourself, as I said, you want to verify that anybody claiming to be from the government is in fact from the government. Don't pay for things in advance. Don't send wires overseas. Don't speak to unknown salespeople. The best investment is the one that you make yourself, and don't pay for the decision you make yourself where you do the research and you find the investment, and don't pay for upfront fees. And then finally, I just want to highlight something very quickly. We've seen a lot of talk about this in the media lately about investing based on social media or short-term trading, where you're trying to profit from volatile markets by buying individual stock, including stock in heavily promoted campaigns that might be touted on social media or on message boards. Following the crowd can lead to significant investment losses. All investments have risk. Every single kind of investment you can make has some kind of risk, but short-term investing potentially has quite a bit of significant risk. And things like margins or options or short sales can magnify those risks as exponentially, and you can lose far more money than you invested. And in fact, brokerages can be able to reject or limit your transactions for all kinds of compliance reasons. So if this is something that you've read about and you've become interested in, I strongly caution you to go on investor.gov and do your research on short-term trading before you invest any of your hard-earned money. As for tips for smarter investing going forward, whether that's preserving capital or trying to be more of an active investor, make sure you know what your objectives are and what your time horizon is. When is it that you're going to need that money? Generally speaking, the shorter the time horizon, the less risk most people are able to take on, because you don't have as much time to recoup those losses. Really be careful about investing based on what you see in the media, and don't let your emotions get ahead of you. Do the research before you make a decision, and make your decisions based on fact and not hype. And I'm just going to say very quickly, which I think we all know at this point, hopefully, in terms of all aspects of our life, whatever you have online, make sure you're protecting it with as secure of a password and other forms of protection as you possibly can. So in general, be aware of the common persuasion tactics and red flags, be alert to common investment scams, and do your research before making any decision. Please, as I mentioned, go to investor.gov and check out our website. Please go and see today at this expo our virtual booth with a lot of helpful information that's derived from this website and from other sources. And then let me close with a slide where we have the contact information for the SEC, including our investor assistance 1-800 number, and our emails, including our email here in Los Angeles, which is losangeles@sec.gov. And then just give me a minute and I'll get myself back on camera and take any questions that you might have.
Thanks so much, Carol. We're gonna now open it up for questions. And I don't know, do you have access to the chat box? Can you see
Let
them?
me see if I can see it. Hold on.
If not, I'd be happy to read them.
Yes. Oh, it looks like some people at least had some trouble accessing the presentation. So let me just say, you know, it's nice that it's in a PowerPoint and it's kind of created in a way that lets you go through certain topics at a certain point. But if there was something in particular that jumped out at you that you were interested in, you know, I am interested in learning more about affinity fraud. I am interested in learning more about how to research a public company. If you go to investor.gov, those materials will be there. They might not be in the same form as the PowerPoint, but the underlying information is there, and in fact, far more detailed information. So anything that you think might have been of interest to you, you can probably find it either in our virtual booth or on investor.gov. Okay, and then there is a question about Bitcoin. So for those of you who maybe can't see the chat, the question says, in recent years, Bitcoin has been in the news a lot. Could you explain it in layman terms and concerns the public should be aware of? Okay, I am going to attempt to explain it to the best of my ability. And by Bitcoin, I'm assuming you mean cryptocurrency of all different kinds and not just the kind that is known as Bitcoin. all of these products involve what they call distributed ledger technology, which essentially means if you're familiar with something like an Excel spreadsheet, it's a way of tracking transactions, but instead of it being centralized, if you've ever worked with an accountant at a business, the accountant is controlling the financial books, and there's a centralized way in which the accounting information is gathered. The way blockchain works is that essentially people working with their computers track and verify parts of the chain or the chain in the transaction to make sure the information is authentic. And that then gets monetized, turned into some kind of something with value, which usually takes one of two forms or sometimes both forms. One will be a token, which is what we would call like a cryptocurrency, which means something that you use almost like money. I'm going to use this blockchain ledger as a token that I can then go and buy goods and services at the vendors that would accept blockchain as a form of currency. So you could use it the same way you might use like a gift card. The other way in which it works is that people generate profits, something that we would call maybe an ICO, kind of like an IPO, an initial public offering, an initial coin offering, where you're going to invest in that blockchain enterprise. You're going to be passive, and then funds are going to be generated. Usually people represent by mining, which is just one way of saying this computerized method of verifying the ledger. This will generate profits. These mining activities will generate profits, and then you will get a return back. That second kind of way in which blockchain technology is used potentially is a security for the reasons that I've described before. Individuals are pooling their money together, then they're passive, and they're expecting some profit generating enterprise. Unfortunately, we do see a fair bit of fraud in this area. So if you are interested in investing with the expectation of returns in some kind of cryptocurrency blockchain business, I would strongly encourage you to go to our virtual booth, to go to investor.gov and put in ICO or put in cryptocurrency or put in some term along those lines, and up will pop a lot of resources. In fact, I think if you go to investor.gov, there is a drop-down menu under one of those bars at the top that specifically says ICOs. And we have a lot of resources about these coin offerings, the risks, the things that you should be evaluating. One of the things, and this is just me personally, that I have seen as the tips have come in about these kinds of schemes is that the people running the scheme will say, invest your money, we're going to buy a whole bunch of mining machines, a bunch of computers in Indonesia, where they will be cheaper. And then we will run all these programs on the computers, they will generate a whole bunch of blockchain entries, and that will generate profits for you. But how do you really know if somebody is buying a computer in Indonesia? It's not like you and I are going to get on a plane, go to Indonesia, and track down the computer. And so what we very often see is that these are just Ponzi schemes. People are taking the money based on some kind of representation, paying themselves, paying new investors with old investor, or paying old investors with new investor funds, and there are no mining machines in Indonesia or wherever. It's just another way of selling the same kind of fraud. Now, that is not to say that this is true of all blockchain investments, but anything that's new, there's definitely more risk. So it is something you want to be really careful about. And to get kind of a complete view of the landscape, again, I would go to investor.gov and put in the term ICO and look at the materials that we have there. We even have a sample of what a web page that's pitching a potentially fraudulent ICO would look like. And you can kind of play around with that and see where the red flags are in that area. Hopefully that wasn't too long of an answer and didn't stretch my own. I've seen a lot of blockchain scams, but I am not a computer person myself. So hopefully I explained that as well as could be. Anything else?
There was a question on another screen, but I think that you answered it. It was, what is EDGAR? I think that you did go over that slide.
Yeah, I'm happy to go over it again. EDGAR is an acronym for something that I'm honestly not going to remember off the top of my head, but basically, Edgar is the database of all the filings of public companies. So when you are a public company, in other words, a company whose shares are offered to the public for sale, then you have to make certain disclosures to the public. That's basically the way the federal securities legal framework works. As you have to make certain kinds of disclosures to people whose money you're trying to get. Assuming you make those disclosures, then it's kind of buyer beware. So if I were to say I am running a company, but I don't have a lot of experience running a company, and I don't think my product's going to be very successful, but give me money anyway, and then you went ahead and invested with me, you've taken that risk on yourself because I've made those disclosures. That Edgar is the database that makes all those disclosures available to the public. And typically public companies will file quarterly reports that will have pretty detailed financial statements. They'll have to file documents when key personnel come or go with the company, when they have a press release that they issue to the public. All of those documents then are gathered together in this Edgar database and are available to the public. That was the search engine that I showed you on sec.gov when I said you should search the thing, the product that you're investing in. That's in the Edgar database.
And,
okay, I see. Is there time for one more question?
yeah, that's what I was going to say. So there's one more question listed in the chat box, and then we'll have to close.
Okay. Okay. So the next question I got is a pump and dump stock more or less a cheap or low cost investment? Well, the answer I would say is yes and no. It is a cheap investment in the sense that in a pump and dump, the individual shares are usually really quite cheap. So you might be able to buy a share in a microcap company for 30 cents a share. So if you had, just a few $100s to invest, you could get a lot of shares of this company. But keep in mind, the reason why they're so cheap is the market doesn't think they're very valuable. If the market, meaning, the whole securities market, thought that they were valuable, they would be priced like Microsoft or Tesla or something, hundreds of dollars a share, which the market has decided those companies are very valuable. If the shares are only priced at that amount, then the market's decided they're not very valuable. So yeah, people sometimes invest in this part of the market because it is expensive. And they figure this is an easy way to get some experience and not lose a lot of money. But as I say, the risk in this part of the market is quite high because these are risky companies by their nature, and also unfortunately does attract a lot of fraud. If you are an insider and you became the founding CEO of a pump and dump company, and a pump and dump is a bad thing, there's no legitimate pump and dump. You became the CEO of a company that was going to run one of these fraudulent schemes in microcap stocks. Maybe you would get issued 1 million shares of this company, and you might get them for free. So as people like you and me innocently go in and buy the shares, they don't know it, but the shares that are on the market are coming from the CEO, that the bad CEO got for free. And if he's selling millions of these shares, even if he's only getting 30 cents a share, his potential profit is quite large since he paid zero for them. That's why they're valuable scams to run for the people who are the fraudsters. Even though the shares are very cheap, the bad guys can make quite a bit of money. And collectively, the losses of all the shareholders can be quite high. You or I might only lose $300 a piece, but if there are dozens and dozens of investors losing $300, that amount adds up quite quickly. So yeah, it's a low-cost investment in the sense that the individual shares are not expensive. It's not necessarily low cost in the sense that it's pretty risky. So the risk of loss is much higher. So hopefully that answered the question.
Thank you so much. I think you definitely provided a great, you can't see me. There we go. Valuable information. And I think there's probably still questions out there. I know you recommended the website. Would they be able to go to the virtual booth for Joanne to answer some of those questions as well?
Sure. Joanne is there, and I'm sure to the extent there are questions that she can answer, in the sense, as I said, we can't give legal or business advice, she would be happy to answer them. And then if you're not able to visit the virtual booth or you can't access us, please reach out to us. You can email us at Los Angeles, all one word, lower caps, Los Angeles at sec.gov. That's our email. You'll reach me and Joanne in our group, and somebody, I guarantee you, will respond to you. Los Angeles at sec.gov.
Great, 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 great. Hope you guys got that. And
Put that in the chat.
put that, yeah, I was about to, yeah, we'll type that in the chat for you. So thank you guys again for joining us for this wonderful session. We do have a meditation class that's following immediately after. So now we can kind of take it all down and relax.
Sounds good. Thank you all so much.
Thank you guys. Thank you, Carol.